Things in the Middle East are making it a little tricky, but where there's volatility, there's opportunities. So let's take a look. First on the dollar, I didn't want to see it come all the way down here, but it has, and this double bottom has always been a bit suspect. I didn't like leaving it here. Can we come all the way back here and tap this gap? We can. Do I want to see that? Not really, but it's possible. You know, if there's some longer term peace deal that is made between Iran and the United States, we could see the dollar come back and sweep these lows. I do still think we're bullish. We have yet to take this high into this imbalance. So on a weekly time frame, we wanted to see it a bit more bullish. It did come down where we wanted to see it. It did start that reaction, but then last week certainly took a tumble. So on a weekly basis, you know, we are sweeping the body here into this sell side imbalance that was inverted here. So we could just see the turnaround happening from here. We did come back into, I believe, a discount of this range, which is from here. Why does it not want? Okay, which is from here to here. So yes, we've returned to discount. It's possible we come in and look at this weekly imbalance right here before we actually turn around, which is right at the 618. So, you know, that would make sense to see the dollar this week kind of take a little more of a tumble into this range here at the 618 for the week and then start a bounce, which would mean then that the euro has a bit more to run to the upside. And now we're seeing this reaction that I wanted to see a week or two ago, but we needed a consolidation here. This to me is still a stop run on all this liquidity. And, you know, we could just see a wicking of these bodies. If we get really bullish on euro, we could come up to this imbalance. But right now, you know, this weekly imbalance from a while ago is where I might look to be taking a good short. Jeez. If I can extend that across, right? So that's in this 618 zone. It would wick the bodies. We could hit the median of that, the consequent encroachment of that. So we could see the euro just do a little bit more of a run up here into that before a run down. So we're seeing what we wanted to see, just on a little more of a delayed basis here. I don't see that as too different on the pound either. Is this high in contention? Potentially, right? So if we're going to draw a similar volume imbalance on the weekly here, right? We've just wicked into that on a weekly time basis. We could go all the way back up here if the pound is going to show some bullishness against the dollar, and if the dollar is going to weaken down to potentially that double bottom, maybe the pound clears this double top. So again, a couple weeks back, we wanted to take this short. It started to look good, and then the news just kind of made this not a viable trade just yet. So it may end up, I'm still planning to be short euro or pound after I might see another little manipulation here. I do like that the bodies aren't particularly closing here above the super premium level. So I kind of want to see a wick of that maybe for a double top, or if we can get a clean breaker here, that would be great. So if we can clear this, maybe to the consequent encroachment of that, leaving this double top, that might be okay, and come down. For gold is in a consolidation, and I've wanted to see this run up to premium for a while now, and we haven't really gotten it. So what I'm thinking on gold is actually, I doubt it's going to continue a flush downward without some kind of liquidity grab. We saw 2 weeks ago, we wanted to see this trend line blown out, and that happened. We've consolidated, we've gapped up, and now, you know, we could probably see a little run down for the beginning of this week, and then a run up to grab some of this consolidation liquidity before the rundown. So that would be what I would expect on gold this week on a 4-hour basis. I would expect the gap from the weekend to fill first, and then I would expect probably a return to heavy premium right up to here for this dealing range, possibly the larger dealing range, which would put us above this high and right up to this level 44.57.3, which is basically where we've been drawing before. So again, our levels here are 4,300 and 44.58 basically as the two super premium zones of this dealing range and of the parent dealing range. So if gold can have a really big run up to 4,500 even, definitely be wanting to short. Above this high is certainly acceptable, but I think we'd be looking for super premium at 44.58 before we get a dump here on gold. Silver, very similar story. This consolidation here it's hard to believe that we would just flush and run it out. We did sweep this double bottom here last week or 2 weeks ago. So, really this consolidation, I'm seeing this trend line as a very large candidate for liquidity grab, right? So here we could definitely sweep a lot here, right? There's a lot to sweep here, which may just flush, right? I'm bearish silver, but what I would like to see is a sweep of this, a close back above, and then a run on a lot of this trend line liquidity here. Whoops, I didn't want to do that. Again, super premium of this dealing range is up here at 68.3. So what we've been kind of outlining the last several weeks is try to get silver and gold up into their premium zones of the dealing range before we flush. And we're seeing that. I mean, it's just consolidating here. We'd like to see a consolidation, a liquidity sweep, and then a run down. So that is what I'm looking at on silver, a run up to 68.3, or at least above this high, potentially just into this order block, but that seems pretty low. We'll see. If silver starts to turn around in the 64.8 zone, there's no reason we can't short it there if gold is looking as bearish, or if gold has hit at a higher level, so we can look for some divergence in the assets there. But for silver, I'm looking for a light sweep here and then a big run up and then down. So that would correlate with, a big run on euro, big run on pound, potentially for the dollar to take a dive this week or next week, as the middle of Q3 is going on, and if their peace talks and strikes really stop for a while, oil can come down. These risk-on assets for now can go up, and we'll see. Copper, again, this double top has been suspect for a while, and that's what's kept me from being ultra bearish on copper. We've now left another little double top, which if we see a break, a tap, of continuation double bottom in here to kind of keep this trend line alive. For now, what I would see is this trend line kind of holding with copper running down to its discount levels, and then we're gonna run out this double top to the point, hopefully, of 68795, which is the 4 standards that we measured 2 months ago, before we actually would then see the run down with silver and gold. So these metals are really making a case for copper running these out this week or into next week. And, we just have to see how this plays out. But I would expect copper to follow silver and gold with a little sweep on the bottom here. It actually may diverge here, where copper will not make a new low, silver and gold will sweep possibly before this run up to sweep this double top. And again, this has been suspect for quite some time. As we've analyzed, we were hoping it might hold and come back much later on the further bull run that I would expect once some of these metals bottom out, way down here potentially for copper. But it's actually quite the bearish case if it wants to sweep this and come back down. Right now, that would leave no smooth tops here on copper, so we'd have kind of a free run to really attack all this liquidity. So I'm not opposed to this kind of action on copper, where we would sweep this as a final run on liquidity before we take a dump on all the metals. So that's what I'm looking to do, and that's what I'm hoping the market will do to give us a pretty clear signal that these are gonna run down. On crude oil, then, this is tricky. If peace is in the cards, at least for a little while, we did leave a sweet double top right here. But if peace is going to be in the cards for the short term, I would expect this low from 2 weeks ago to get swept out. So this would be a short opportunity in here for oil if again, as the peace talks may restart, then we could have a run below this before we get another run up if things are going to start looking bad in the Middle East again after that. But we've said possibly $40 a barrel on oil before anything else, and right now this isn't too far off. We went a little bit higher than we thought we might into the super premium of the stealing range, which again, we want to be waiting for super premiums to be taking shorts. And so that was where we drew the lines, were 618 level, filling both of these gaps. We went a little bit higher and we actually swept the body of this into this gap and actually closed the bodies in right to this gap here. So if I think we drew that a while ago, but I'm going to draw it again here because it's actually very algorithmically precise. If we draw in this gap here, and we see where those bodies went. Actually, yep. Yeah, I mean, what can you say about that? It's pretty much above the super premium, right into fill in this weekly imbalance. So now that we have gapped down off the 75%, I could say, and we did it again here, we've gapped through the 50% of the stealing range. So we could very much be looking at bearish oil until we clear this pretty weak low here. So that's what I'd be looking at for this week and next. So that lends to the bullish analysis for all the other things we've looked at. Soybeans, you know, we've had this marked out for two and a half months now, right? So wanted to see a rundown. It didn't go quite as far as we thought, but look at that. We went right back up, cleared this double top, and while we didn't make an all-time high, we did, I think on the adjusted basis, yeah, on the adjusted basis, this is a bit cleaner where we don't actually sweep this high. But on the continuous contract, we do sweep this double top. We do leave a bit of a double top here, but I would think now that is acceptable. It's long enough ago, at least for now, where this market maker sell model right here can be completed on soybeans. So we can see certainly a dump on soybeans to break this trend line finally and hit 4 standards at 10.15.2, closing in this imbalance before we really look at much else. So soybeans are short. Soybean oil, very similar story. We saw this gap down with the contract shift. We consolidate, we start ripping up, close in the gap. We do come to a super premium, maybe. Let's see. No, we just come to a premium. We hit the 50%, almost hit the 618, but we did fill in that gap on the adjusted contract. We came up to, yep, above super premium. We fill in this sell side imbalance and we made our way down. So it's really kind of too late to short this on the adjusted contract if you're looking at this, but on the non-adjusted contract, right? Actually, we are still pretty late to the game on a short here. So I did short it from here, but then I saw something where I got out here because I wasn't convinced that we were done, and we actually had 2 more drives. So I did not get back in short here. I was on vacation. You could definitely be looking for a short anywhere down to sweep out these lows because it's very, very, very likely to do so. The question is, how much risk do you put on to do that, right? This sell side imbalance down to the let's see, the sell side imbalance off the 50, I don't think we would get back up to the 50. So if you see kind of any bullish action back up in this range, you could short that down to the bottom, possibly lower, right? So 1 standard from that dealing range is down to 55.58, which is the super discount of the parent dealing range that we've been looking at. So a longer term hold on soybean oil shorts would put you at 55.80 roughly, and that would be 1 standard from this manipulation up here, which is a reasonable target. First target would be these lows for sure, and then we might see a reaction to kind of build a new trend line here. So the market's going to try to give a retail signal that this trend line might be here. So once we sweep these, we could easily come back up to a premium, make another stop on this trend line before we come down and hit 55.80. So that's kind of where I'm looking there. You could take a late to the game short on this to come out down here, but once we see the price action there, if we don't see a big red displacement through these lows, then I would expect a run back up to kind of build more of this trend line before we would actually see soybean oil dump to 55.80. Indices, ES certainly looking like it wants to finally run these highs that have been here for a while. So I'm just going to hide the drawings for a second. These very clean equal highs from June. Like, yeah, these have always been suspect, and this little wick wasn't doing it for me. So I highly doubt we just run into this super premium and dump. I think ES is really willing to take all this, as is YM, right? So we had that nice close through the double top 2 weeks ago, and we've just consolidated with some dumps here. But ultimately, this was basically building buy-side liquidity with all these equal highs that has now just been run out this morning. And we're going to 55,000, I hope, in my analysis, where that's the 4 standard deviations to take the longer term short. So YM has basically just been building this trend line, this smooth high from 2 weeks ago, and now it has the reason to punch through. NQ is a little bit shyer, and maybe this double top is what gets run on its way. Like, is this enough, this double top? Hard to say. I mean, I'm really bearish indices once we clear some of the topside liquidity, but for now, this is really on NQ. I think we've shown a willingness to displace above this high. So we're starting this last market maker buy model where this can be, 1 push, 2 push, 3 push, and maybe we wick this to make the run down. So I am seeing something up to here as possible and likely before we really would make a run down. And this has been in our analyses for a long time now. So as a conservative spot, we could see just a run on these highs before we run down. But, if I know anything about indices, they're going to take as much liquidity as they possibly can before they will actually make a bigger run. So that's where I think NQ actually will end up sweeping this. That gives YM some room to really run up to the 55,000 mark, which is the 4 standards that we had outlined from before. And ES then could likely go beyond 77.10, which is where I had it, originally, the 4 standards drawn. If it is going to go beyond 77.10, I think other projections we had marked were potentially 82.40. That seems really high, and I don't. That could be, I don't recall what I actually measured over there, but it's over there. More likely, we'll probably see a 1 standard of this consolidation here. So if that were to happen, 81.86 would be 1 standard kind of above this whole range here. We have just consolidated in super premium, so it's possible that we just punch somewhere through here. Once we get a close back within this dealing range below 77.10, I think we can be looking short pretty well. But for now, ES is very, very likely to run all this buy side liquidity here, and it's just a matter of how far it goes. So I'm pretty sure we're going to go up and then drop. Bitcoin is still bearish, and we're just still not getting these runs to premium that I want to see. So maybe now that we've left a double top here, right, that we can actually sweep some of these lows right in here and then make this way up to a premium to finally short this puppy. You know, it's just been a dog, and it's been consolidating here for far too long, in my opinion. But who cares? That's not what the market looks at. They don't listen to us. So yeah, I mean, even on a 4-hour basis, what we've been in the 67 to 57 range, and that is tiny for Bitcoin in the recent history. So I do hope to see a sweep of some of this, a run up to liquidate a lot of what's been accumulated here in the last 2 months, and then a dump, possibly a run farther up here to liquidate everything in the first half of this year, and then a dump. But just be mindful for that. Yeah, I'm not necessarily planning to long it because it's just been so heavy. It could easily just tank. But if you are seeing a run up, then be ready that it's going to be taking some liquidity for a reversal, in my opinion. I don't see it really getting anywhere back above 101 because this super premium is back to 108.06, and that may just give some of those permabulls that last bit of hope to say, all right, we're skyrocketing here. If we get to 100, sell it for sure. But I don't even think we're getting there. So that's the analysis on Bitcoin. It hasn't changed. I'm waiting for a premium to sell it, but it could just flush and miss the opportunity entirely. But that's okay. There's plenty of other things to be trading. So that's it. Hopefully a bit shorter this week. Keep it simple. And, you know, there's a lot going on. So just keep your risk in check and have a great, safe trading week. We'll see you next time. Cheers.